What's up, guys? It's March 18th, 2024. Pretty sideways day. Today was tough. I didn't trade today. Oh man, I think it went sideways because the measured move was met so fast. Yesterday's range is right here. Orange is yesterday's high. Top orange yesterday's high. 50% yesterday's low. 45-minute EMA and the 5-minute EMA. I study Albrook's price action methods. I'm not associated with their group. I'm still learning how to trade. I'm not no profitable online guru. Where I'm at is I pretty much this entire year I've been making my profits, which you guys see, and then 1 to 2 days before the payout I blow up. So I'm just taking a couple days off. The reason I'm saying this is because I realize there's a lot of new people here. Excuse me. So I want to make sure everyone knows what they're getting. I'm not profitable by any means. I haven't got a payout yet. I'm very close to a payout. I'm just taking a breather and I'm going to get right back in it. So yeah, that's where I'm at. I make these videos so I can learn how to talk about the markets, and they've been helping a lot to hear how the leg count and whatnot. I talk about the first 6 bars of the day because they help us they can tell us what to expect for the rest of the day. Then I talk about the leg 1 and leg 2 moves because I like the leg count, and I also put leg 3s in there, but I trade leg 1 and leg 2 moves, so I put an emphasis on that. And I talk about the market cycle because the leg count ties in with the market cycle. So depending where we are on the market cycle is how we're going to have to manage our legs. Because if we're range bound, it's pretty hard to count legs. But there's micro legs. See, 1, 2, 3, market turned around. So yeah, we'll get into it. Welcome if you're new. I appreciate you guys stopping here. Appreciate everyone showing support and all the comments. You guys are awesome. I like to look at gaps as bars. This is what Al teaches us because it pretty much is a bar. It gets treated like a bar. So bulls get the breakout from yesterday's range here, and then they go for a measured move. This blue line is a measured move of this range, and it's met within like the first hour. Bar 12 is hour 12. Hour 12. The bar 12 is end of the first hour. So gap up with continuation, good for the bulls. Bar 2, bad for the bulls. But you can also see bulls get trapped by 1 tick because the market traded higher and then trapped them immediately. And they had a chance to get out with bar 3. Bar 4, 5, and 6 are bear bars. Starting to look like a pullback. Bears go for a new low of the day, but it becomes a 2-bar reversal with bar 6 and 7 right here. And then bulls go for they go to complete the measured move, which is this blue line here. I see a leg 1, pull back leg 2 here, pull back leg 3. This is a micro wedge top into resistance, and the market goes sideways. Bears get their legs down. Al says that we shouldn't overlook sideways price action, and I pretty much just glossed over that, and I was going to get right back to the leg count. So just to sharpen our eyes or something, I don't know, we're going to talk about these bars because I really don't want to. So... oh my god, my head is spinning, dude. Why did I just throw it out? Why did I say that? So bar 12, indecision at high is really bad for the bulls. They get trapped as they buy here. Bad follow through. Bar 13, looks like bears are going for the reversal. They want to tag the EMA. Bar 14 is a bull bar and a bull trend with a strong gap up. However, it doesn't close strongly. It closes below bar 13. 13's high, so there's sellers starting to stack around here, and we can see that through the wicks. These tails show us that people are selling, and then the market goes range bound here with bar 15 goes down, bar 16 it goes back up. Bar 16 is almost an outside bar, but it doesn't trade 1 tick higher. Bar 17 becomes an inside bar. Bar 18 goes 1 tick below it and closes at this. It doesn't make a new high. Bar 19 goes 1 tick above bar 18 and then trades lower, so this is a true outside bar at resistance. And then bears get a leg 1, pullback leg 2, leg 20. This is a pause bar, could be it's a pullback on the 5-minute. Then make a new leg lower, pullback, and a leg lower into the EMA. This is a leg 1. Okay, so leg 1, pullback leg 2, pullback leg 3, pullback leg 4. I was counting the reason I reset the count is because I realized I was doing a fractal leg count with wicks, but I'm going to talk about the 5-minute legs. So from a 5-minute perspective, this is all one leg. Pullback initiates second leg, leg 2, pullback leg 3, pullback leg 4. and the market reverses. This bear channel is tight enough, I think, for a second leg down of its own. Pull back leg 1, pull back leg 2. The market goes sideways after that. And then it goes range bound. It's hard to count legs and ranges, and we should wait for a double bottom and a double top to be put in, and then wait for 2-bar follow through. The market went sideways for most of the day, so we really didn't get that 2-bar follow through unless you short here, but that's shorting right into the EMA. So we were right here when I got sidetracked. How much time? We're 5 minutes in. I try and keep these videos on like 10 to 15 minutes long. More on the 10-minute side, but I've been going around 15 minutes sometimes. So bulls get 2 legs. So yeah, I said this is a tight channel. It's good enough for a second leg down, I think. Although this also would look like a good buy for the bulls, but where is the higher low before the buy? Instead, it becomes somewhat of a double top bear flag. This is acting as resistance. I can draw a little box. I don't trade with boxes, but I do like to just look at them after the market. I do play around and draw things like resistance and stuff, but I don't trade with boxes on. It messes with me because for some reason I think so if the market is unfolding and I draw a box, I don't know why, but let's say I draw like a resistance box, no matter what happens, I would just sell it. Like, it doesn't matter if we're in a bull trend, but if I draw that line, I just sell it. I don't know why. Same thing, if we're in a bear trend and it hits a green line, I just buy. I just buy it till it goes off the screen. Yeah, it doesn't even matter. So that's why I don't trade with boxes. I'm not trying to sound like some cool guy. I just notice, I don't know why. As soon as I see the line, sell. Green, buy. So that's also why I have black and gray and black charts, because I just do it. I don't know what the hell that's about. But so yeah, there's a box here you guys just saw. It's acting as resistance, and then bears get 2 legs lower, leg 1, pull back leg 2. Bulls get their 2 leg, pull back into the EMA, leg 1, pull back leg 2. I've been trapped so many times at bar 48. It's unbelievable. Seeing this one unfold, I was like, no way. I watch the markets, I just don't trade them sometimes. Well, Mondays and Tuesdays I won't be trading. I had to get a 9 to 5 because I kept freaking getting smoked. But it's not forever. It's only for a couple months. So like, I want to see how I'd trade with less days and just like having an adequate income instead of doing weekend warrior stuff, like Craigslist crap and selling crap. Okay, anyways, leg 1, pull back leg 2, pull back leg 3, pull back leg 4. Into the resistance, and the market sells into support. It's a very hard day to trade. Very hard. Lots of overlap, very tight range. Let's go over the leg 1, leg 2 moves. So obviously they do not get their leg 1, leg 2 move. However, they do get their breakout measured move, which is a form of 1-to-1. But there's micro leg 1, leg 2 moves too. That was met nicely. 2 reasons to take profits around there. This measured move's met, and bar whatever the measured move for the yesterday's range is met. Whew. Leg 1, leg 2 here. Wow, look at that. You can't even make this up. Look at that. You guys are watching me. Okay, maybe you could say like right there, it's not as perfect. What about if I make it perfect though? What about from right there? Okay, no, that's how we cheat. Okay. And then we get a leg 1, leg 2 here. And that's met. I want to see if this is met though. I want to see if this entire move here is met. It is met. And that also pretty much is the range for the day. This becomes resistance for the day. That's support until right at the end of the day. So yeah, you guys see that leg 1, leg 2. And I mentioned I see this leg 1, leg 2 that I used to get trapped on religiously. Trap. And then this is so fractal, I don't think it's... I mean, I think you could buy it here, but like you'd have to scalp very quickly if you were going to go for a leg 1, leg 2 move. So, but we can just do the measurement for good practice. That's met. Then you can go for this measured move here, the pullback, and that's met. That's not met. Almost met with bar 59's low. But would you put that there? Or you could put it at bar 56 is low and get filled for sure. It's like what, 2-3 points? Yeah. Tough day. If you don't catch the highs, then you're done. If you don't buy the lows, you're done. You get short here, trapped. Get long here, trapped. And here we can see another small leg 1, leg 2. Boom, boom, boom. That's 3 legs. Where are we in the market cycle? Where are we in the market cycle? I don't know. I don't even know. Okay, so today, this might help talk about the market cycle a little bit. Remember I said I think this is one big bull bar around. Hold on. I said this is one big bull bar. So look at it. It started at its low and came to its high. And the reason I'm bringing this up is because I think this will help talk about the market cycle today. I'm gonna delete this now. You guys see like this is one big bull bar and why it is one big bull bar. Because we trended. It was a trend, right? And what happens after a trend? So the market resets after a breakout. So the market cycle is what? Breakout, channel, range, and usually the market can start to test these. I read in chapter 6, when the market starts to reverse, it's going to start testing good breakout signals from the opposite side. So if we think in reverse, a breakout would have good signals, start the channel phase. There needs to be a good signal to get the channel phase going, or there needs to be some sort of signal. So if the market was to reverse like this, it would eventually tag that signal. If you don't know what I'm talking about, you got to check out chapter 6. That's a little bit confusing. I didn't mean to go off topic. Let's talk about the market cycle. So the market cycle starts as a breakout, channel phase is initiated after first pullback channel, and then it goes range bound, and then it resets. And the reason I'm bringing that up is because the market was range bound here, and then it trended during pre-market hours during the London session, and then we went. So they got their first pullback, so the market's in a channel, right? And then what the hell is going on here? So then they go for the breakout, and the market. Then the bears get the market. I sound like a clown right now. This is tough. This is a tough one. Then the market goes range bound, and bears start testing the breakout points. This is what I'm trying to talk about. See, a good signal gets tested. Good signal, it's gonna get tested. This breakout signal, it got tested. So this is all part of the market cycle. It's the breakout. So the breakout was here. You see the breakout is right there. Channel. Then we channel, right? This is the channel. And then we go range bound, remember? Range bound. And then we break out. And then our targets start to become signal bars on the reversal. You guys got to check out chapter 6. It was a tough. Is it chapter 6? Whichever one is the latest one. Oh, wait. I don't know if I posted it yet. Yo, I'm tripping. I haven't posted it yet. It's chapter 7. Talking about magnets. I apologize, guys. Read the blue book if you're not. Don't wait for me to post it because there's so much information. I'm going to start wrapping this up because I'm going into that 15-minute marker. Read the blue book. Market cycle is breakout, channel, range. Here we have the breakout. Here we have the channel. Then we have the range. And then they start to test the bull points. That's the target for the bears. Really interesting stuff. Read it if you're into trading. I hope you are because you're here. Really cool day on the daily chart. Looks like a head and shoulders reversal. Starting a stack. Bulls are not getting good follow through at the trend line, which they've been respecting for a very long time. And I drew this hella long ago, so you can't even say that's made up. You guys have been here for a while, know that I've been geeking over this trend line. Even if it breaks, we can still use it and see if it gets retested. So, or maybe it bounces. We don't know what's gonna happen. Starting to form a double bottom. We are in a bull channel. We've been trading above the EMA for quite some time. We haven't tagged it. Bulls are keeping the gap open. 45-minute chart is looking. This is the 45-minute chart. So this is the green line on the 5-minute chart. This is the same green line. This line is that line. This is not that. I just have that on the daily. And you can see the bears are getting pullbacks into the EMA, but bulls broke above the EMA today, and then bears pulled back a little lower. So they're going to start targeting breakout signals and see if they can get some strength. Hope you guys are doing good. I hope you guys are learning. I appreciate everyone coming through. There's a lot of new people. Keep asking questions. They're helping. I hope they're helping you. They're helping me a lot. Drop some comments if you guys have some questions. Learn the market cycle. At least you don't really have to trade leg counts if you don't want to, but the market cycle, it happens everywhere, and it's going to continue to happen. So it's inevitable. Learn it, study it, love it, breathe it, eat it, sleep it. I'm being serious. It has to seep into your subconscious. I'll talk to you guys later. Have a good one. I hope you guys had a good and safe weekend. Bye.